Hello and welcome to Take 5 with SAX, 5 minutes of our 65 years of experience where we address important topics that impact your business and your life with our experts here at SAX. My name is Todd Polinak and with me is my partner Craig Wikipedia Casano, Winky for short. And today we have our resident expert, Frank Centrella, whose love and passion is to help business owners to not just survive, but thrive in these difficult times. And Frank is the leader of SAX's tax controversy practice, and he's going to share with us what business owners ought to be doing now to avoid any regrets later, especially in dealing with matters that involve federal, state, and local taxing authorities. But before we go to our interview with Frank, I want to ask Craig, can you share with us some interesting tips about tax controversy? Winky?
Thank you, Todd. So before we turn it over to Frank, I wanted to do my thing and provide our listeners with a few interesting nuggets. So to lead with a bit of history, in 1894, Congress enacted a flat rate federal income tax. And nearly a year after enacted, the Supreme Court declared this tax unconstitutional on the grounds that it did not apportion tax on the basis of population in each state. Switching gears for a moment, the IRS Special Investigation Unit chose Frank J. Wilson to investigate none other than Al Capone, primarily focusing on his spending. The key to convicting him on tax charges was proving his income, and the most valuable evidence in that respect originated in his offer to pay the tax. At one point, Capone was willing to pay tax for various years, admitting income of $100,000 for 1928 and 1929. In the end, he was charged with 22 counts of tax evasion, convicted of 5 counts in 1931, and ultimately sentenced to 11 years in federal prison. And a quick final fact, in terms of stats, in the past couple of years, the IRS audit rates have been roughly 1.1% of tax returns filed for income ranges between $500,000 to $1 million, 2.2% of tax returns for income ranges of $1 million to $5 million, 4.2% for $5 million to $10 million, and 6.7% for income amounts exceeding $10 million. This is a clear indication that the IRS has and will continue to target higher income earners to maximize their resources. There you have it. That's me winking at you.
Hey, thanks, Craig. Frank, the floor is all yours. Tell our audience what things they should be doing now so that they have no regrets later. Frank?
Thank you very much, Todd and Craig. I appreciate it. As Todd mentioned, I'm Frank Centrella. I'm the director of the Controversy Department, which in plain English means if you have an IRS exam and you're one of our clients, you will be talking to me at one time or another. And I would like to share with you where the IRS is today and where it's going. It's very important to put this in all perspective so it makes sense to you as this podcast goes on. Where the IRS is right now is there's been remote since March. So what remote means is there's very little integration with the departments for the most part. So unfortunately, it's become very challenging, as I'm sure some of you people are aware, if you're dealing with the IRS or receive correspondence to rectify issues. They're allegedly going to be fixing this problem. I've been on the phone with multiple people over the last year or so as to how they're going to address this stuff. But until they start hiring more people, it's going to be problematic that we're going to have to endure this until the IRS comes fully on staff and back into the office. But a prime example is we have some refund claims with the IRS that are still in process and they were filed over a year ago. So it's an unfortunate circumstance where we're in, but that's what we all have to deal with. So that's where the IRS is now, but let me tell you where they're going. The first thing they're going is if your business was operated as a partnership over the last several years, you had a very small chance of ever being audited. The IRS didn't know how to audit them. They didn't know what to do, but that changed a couple of years ago. So they put in a new group of auditors that they have trained to address two things. One, high net worth individuals or high income earning individuals, which could be somebody making as little as $250,000, or people who invest in partnerships. And these auditors have now been trained on how to audit them and how to run them through. In the last 6 months, we've had 5 audits on this in our practice alone. Ironically, in the prior 5 years, I only had 1. So I could advise you, if you have a partnership, you have to be expecting that the chances of you being audited now are far greater than they've been in the past. And speaking of audits and where the IRS is going, if you've been listening to the news lately, the president and the Democrats in Congress have been trying to pass different provisions, tax provisions, budgets, etc. And as part of these budgets, in almost every one of them is the expansion of the powers and the expansion in the numbers of IRS individuals and employees. They feel that there's an unrecorded tax gap of $1 trillion in the United States right now. Much of that is founded on partnerships, as I mentioned before, but also the impact of cryptocurrency, which they feel is also being used as a form of illegal trading and transacting with people and escaping underneath the radar screen. So, as I said, I would expect audit activity with the IRS to kick up tremendously over the next 2 to 3 years as they hire these people and train these people. These audits will be focused on most of the people listening to this call who either have businesses or who also have a degree of investment income. And these agents are being trained. So the important thing you want to take away from this call as well is not only to expect that there's a better chance for an audit, but to be in communication with your tax advisor as part of this process so you can prepare for it. The best offense is a good defense sometimes, and the best defense is a good offense. So you want to make sure that your accountant and you are on the same page with everything, so there's no surprises when you are examined. A lot of times being examined by the IRS may not be a problem, so you should not worry as long as you've sat down with your tax preparer ahead of time and understand everything that's going on. It's not something to be scared of, which is why we're here to help you out with this information and with these audits. But that's what's to be expected. The type of items that the IRS examines for people on top of the partnerships is if they have unreported income. That seems to be a major trigger. If you take excess deductions either on a business return or as an itemized deduction, that could even be something as simple as having a large charitable gift in 1 year, ironically, could generate an audit. Once again, it could generate an audit and not result in a change, but the IRS uses certain statistics to compare your income level to the deductions. That will determine if your return will be pulled. And as I mentioned before, if you have a business and you have a lot of vehicles on the books, whether that's on a Schedule C or it's through your business filings, that's always an IRS trigger. And that's what the IRS is looking for. I would anticipate that one of the changes we will see under the new administration as part of the audits is this focus on high net worth. In their estimation, if you make under $200,000, you have a 1% chance of being audited. If your adjusted income is over $1 million, that jumps to 10%. And these are all statistics quoted by the budget office down in Washington. So there's going to be a lot more audits coming down the pipeline, especially the next few years. I highly recommend you consult with your tax advisor, make sure you're both on the same page, and make sure you both understand if there's any issues that you have to be concerned about. Well, those are the items I wanted to touch on today. If you have any questions, you know how to comment us. Our contact information will be put on later on. And I'm going to send this back to Todd to have his final comments.
Thank you, Frank. Ending our podcast with a quote in the spirit of our discussion today: death, taxes, and childbirth. There's never any convenient time for any of them. It's a quote from Gone with the Wind. Not much has changed. So if you'd like to ask a question about today's topic or any topic, have a comment, or would like to learn more about us, you can send us an email at take5@saxllp.com. SAX is committed to being our clients' #1 advisor by understanding their vision and providing solutions that exceed expectations to assure their success Every day we strive to live our tagline, SAX, expect more. Thank you for taking 5 with SAX, and we wish you all an amazing and profitable day.